It's 9 o'clock, so let's go ahead. I'd like to welcome everyone to our June 3rd Thursday marketing meeting. And we're going to talk about things like the weather. We're going to talk about prices of corn. Maybe we'll talk about interest rates. So, Brooks had just asked me about the weather in Nebraska. In the month of May, it was monsoon season. Yes, we picked up about 5.5 to 6 inches more rain than what we would normally see in the month of May in the Omaha area. Now, June, we were supposed to get a lot of rain over the past week. We failed. We got a little bit of rain, maybe a half an inch, but not the 2.25 inches that people were expecting. And the weather pattern appears to be breaking down. The forecast going forward is taking more precipitation out of the forecast and it's replacing it with heat. And this is, along with the meteorologists I work with, this is what we're expecting for the rest of the Corn Belt going forward, certainly for at least the next 4 to 8 weeks.
You know, Sterling, we had Jeff on the call. I guess that was last month, and he talked about June and July being pretty tough months for your area, maybe that whole Western Corn Belt. There's been some talk here over the last week, 2 weeks about maybe that pushes off down the road a little bit, maybe July, August now. Do we keep our fingers crossed on that, or have you heard any news on that?
Oh, I just looked at our 2-week forecast, and we are going to be pushing temperatures north of 90 almost every day. So from here,
nobody likes to use the chat on here. I get a lot of texts, but I'm curious, if I had a vote right now, whether we're going to hit those projections. And I think the projection was 52.0 on beans. Is that correct, Sterling?
The yield is 52 on beans and 181 on corn.
181 and change. What are we thinking there, folks? If you're on here, use that chat button. Are we on pace to get that? Slightly above, slightly below? I know my vote right now, with just what little I've seen, would be below that. I think it's going to be tough. It's kind of one of those things. All cylinders had to fire in line. Thanks, Kathy. Slightly lower there. I got a text slightly lower too. So maybe a tough one, Sterling.
I think, the beans at 52, there's a fighting chance. There's always a fighting chance with beans until we get to August. The corn, the 181 number, I actually, for the June WASDE, actually reduced my number a little bit, and I will keep that reduction in place for July and possibly reduce it more. 181 is a record yield. We are not going to have a record yield if we get a dome of doom that sets up over Nebraska starting most likely this weekend and will likely be in place and moving into Iowa and spreading over the next 4 to 6 weeks. We have good topsoil moisture right now. We did pick up a lot of rain, but the manner in which we picked up the rain may not be as great as the total amount that arrived. Of that 9.5 inches we got in May, 2 major storms put in about 5 of those inches very, very rapidly. So how much soil moisture really got absorbed there? That may be a question in some places. We had flooding issues in places. So that tells me if it gets hot and we don't get those timely rains, yeah, we'll be better off than we were if we hadn't gotten the rain at all, but we're still not going to be well enough off to put in a 181 yield. And, there's issues elsewhere. How is the weather down by you, Brooks? And more importantly, let's say the weather from you going north up to the Wisconsin border?
And having only been a couple hours north of here for me to see firsthand, our weather around here, we've had some extreme heat. We've seen mid 90s. We've got mid 90s in the forecast. It seems like that rain, just like Nebraska, has started to avoid us. Our forecast looks fairly dry. 4 nominal chances of rain in the next 10 days. And the conditions in which things were planted, a little wet, are starting to show up right now in corn all the way north a couple of hours. So when I say a couple hours north of me, that would kind of put you in that Champaign, Illinois area.
Right along 74, where those yields are so big up there.
Yeah. and beans have had hurdles. I think of anything in our area, beans are below average as far as the look. Now, a lot of agronomists will tell you you don't have to have that great stand of beans like you do on corn. So there's still some hope out there that maybe they can pull through. Sterling, last year we've got to. I think we talk about this weather, and we see the likelihood of not reaching those trend line yields that we throw in all of our projections. And so we sat here and we look for that big rally. Last year, June 12th through June 21, pretty good market. It was definitely an opportunity. We've got a different backdrop this year, don't we?
Yes, we do. Here, I'm going to put up a chart of, let's see what we have here. There should be a chart of, share this. And there we have a chart of new crop corn. Now, with all this weather trouble, why are we not rallying? Why are we're hovering right around support. If you see the chart here, 460 is a big area. We've come down here and tested this today 1, 2, 3, 4, 5 times after we made our big lows. And the good news is the support is held 5 times. Bad news is, are we taunting it and will it hold it a 6th time? That's the worry. Right now, the market is still well supplied. So understand, when Brooks and I talk about there being a weather problem, we are not going to be able to take this carry out that's currently going to be sitting around 2.1 billion back to 1.3 billion unless something truly horrific happens. We might be able to take it back to 1.8, which would put a little bit of life in this market. So while we see bullish things coming into the market, let's keep in mind that yes, global stocks are a little tighter. US stocks, however, are quite bountiful, and there's still a lot of unsold corn sitting around in farmers' hands right now. And they're in a spot where maybe letting some of this go on every bounce will tend to keep a lid on the market, as it were.
Yeah, I think Sterling, you said it best. Let's look at the best case scenario here for a moment. And the best case scenario is at 90 million acres of corn planted. Let's use that as an even number, and 92.4% harvested. That's around, just for easy numbers today, let's say 82 million that we're going to count on. If you reduce that national average by 5 bushel the acre, which is a pretty extreme reduction.
That puts us back in the bucket of reasonable, though.
It takes,
176 to 177 is a fairly reasonable number.
it is, and that takes us back down to 1.6ish, 1.7 billion bushels of carryout. So we got to put this thing in perspective that we've lived the last couple of years at that 1.3, 1.4. Even with that big reduction, our and should we get better prices? Absolutely. Should we see a return to the 6 and 7s? No.
No. Now, if you can get to 5, I would start to be feeling pretty good. Right now, the funds still have a big short, and we're sitting right near the low. So there's not a lot of inspiration to get out at the moment. Now, a week from tomorrow, we have the acreage report, and that may serve as a little bit of a wake-up call here. We also have an ending stocks report. I just sent in my estimates into Bloomberg and Reuters, Dow Jones, and the Associated Press, and everybody else who asks about this. What I did was I raised corn acres from 90.0 to 90, and I added 500,000 corn and deducted about 400 soybeans to make up for what I added to the corn. Then when I did the ending stocks number, this is when things got a little worrisome. Those ending stock numbers are going to be stout. There's no way around it, especially for corn. There's going to be a big number, and that's something we need to see some changes in the export paradigm right now to get that number down a little bit.
Talk about that just a bit. What we're seeing there is So Sterling and I have talked about this. The USDA's export estimate, and we're talking old crop now. So we're sands in the hourglass before we get to the end of August, and we felt like they were aggressive for the last 6 months. We talked about that on every meeting. It does, in fact, look like, excuse me, we'll pick up 40 to 50 million bushels of some new sales to China, essentially because that Brazilian crop is a little short. But that basically puts us right back to where the USDA said we were going to be from the beginning. So while you're going to hear some positive news over the next 30, 60 days on U.S. exports, um, the USDA had overestimated those, I think, over the last 4 months. So I don't think it changes their number any. But it
Yeah.
is good
Yeah,
that we
we
are
have,
physically getting rid of those bushels.
well, we have seen the flash sales for the soybeans to China. In fact, we've moved, about 300,000 metric tons in flash sales. We need the Chinese to also come and take these soybeans, which we'll see when we get the report tomorrow to see if they actually came in here and we actually saw the beans move. The export corridor, when I look and see sales and I see tenders going through the market, it's very hand to mouth. We'll see. I don't know. The Netherlands comes in and they buy 80,000 tons of beans. You see the sale. The next week those beans are gone and they're moving. So the market is very loose right now. There's no big supply issues going on. Um, there is some talk maybe in the corn market of farmers being stubborn about selling and trying to press for higher basis. That's the good news. The bad news is we aren't seeing a lot of people stepping in for the corn. And we'll throw on top of this, we'll go back to beans briefly. New crop soybean export sales are basically non-existent right now. This is setting the
Sterling,
stage for a better fall, but we are kind of stuck in a lull right now.
yeah, I think those basis levels are something that you have to concentrate on right now if you're a farmer. And, the futures market, it's anybody's guess, but we are seeing, that ethanol demand that we talked about at 5.35 billion for the last 6 months still looks like it's there. Farmers not wanting, it's a tough time for a farmer to move something with everything going on in the field. And so basis levels have come up as a result of that and what Sterling said, and the fact the board sold off. But Sterling, we're seeing some levels at 50, 60 over out your way at ethanol plants. You get over into that Ohio Valley, about as good as you're going to see is that 20, 25 over. And ethanol is the driver right now.
Yeah,
Surprisingly, being pushed a bit by the river and the export market, which is a good thing. But we got to take advantage of these basis levels if you've got old crop corn.
absolutely. And a couple of caveats about those basis levels, especially at the ethanol plants. We saw gasoline prices and we saw crude prices 2 weeks ago take a pretty good nosedive. We were down to $70 a barrel on crude, 71 ish. We're back to 81. So we are climbing. We are right in the peak of demand for summer driving season, and people are traveling. The TSA numbers are huge. So we are in a period where things are very good. Is that
We
going
go.
to carry over into the fall? We see crude at $85 a barrel and gasoline is noticeably more expensive. People will cut back on their driving. One, it's a seasonal factor. Two, that is, just the effect of higher prices. Along with that, for corn exports, if you look at export inspections, we are at the crown of the season right now. We are at the top. And right now is the best period for inspections. Basically runs June and July. After that, things start to back up. And if we see inspection numbers start to drop and the demand begin to kind of, hey, let's wait for new crop, those basis levels could dry up in a hurry. So again, if you're seeing close to the best basis levels of the year right now, don't be afraid to take them. If you want reownership on the board, the market is cheap right now. You can buy all the calls you want as cheap as you like. So right now, I think is a good time to be aggressive if you can, and you've got those basis levels to work for you. Let them do their job for you.
Yeah, and the tough part with these basis contracts is, if you make one, a lot of folks right now are basing things off the July. We're a week away from needing to roll those with the carries in the market. Um, it, it's tough. It's been tough to roll basis contracts from December, March, then May, then July. We probably got one more roll left in you. That's to the August on being September on corn. After that, it's tough to roll those basis contracts in a carry market again. So
Yeah.
our marketing year on old crop, I mean, I'd stress it needs to be over with probably in the next 40 to 50 days. Sterling, how does that time period line up with, we've talked about the concept, I think even 30 days ago, that maybe that this volatility period traditionally might be a bit later. Is there still some hope of getting that 7-day run like we saw last year? Um, any optimism at all in the next 30 days?
Uh,
I'll give you some time to think about that. And I thought I'd throw something interesting out there. Talked about crude oil coming up, and it's interesting. Read an article that JP Morgan, some research they put out, and, it doesn't seem like equities have a stopping point. Equities just continue to soar. I think 10, 20 years ago, a lot of folks like to sell covered calls. That was kind of their way of staying in the market, but also getting out if need be. Interesting. JP Morgan talked about, how did they say it? Defensive hedges. Okay. Defensive hedges didn't involve selling any of the equity holdings out there, but instead buying a defensive hedge. Crude oil talked about in that, metals talked about in that. Any carryover there into the protein markets? I mean, can we be part of that basket? Do you see that?
well, with crude oil is pushing higher under a lot of natural circumstances. Number one, we are building right now premium for hurricane season. Okay, that's a real thing. The waters off the Gulf and moving into the Atlantic off of Florida are the hottest we have ever seen. That is fuel for a hurricane. So that is risk number one. Defensive positions on the S&P. The reason they're not selling calls is because they think they're going to get run over and it's going to get called
Yeah.
away and create a tax event. So buying cheap defense seems like the best thing. The stock market has been a little odd here. Most of the gains have been concentrated in a handful of spots in a handful of areas. Diversified portfolios really haven't made the concentrations that you've had in those certain tech stocks, those AI stocks, that's worked really, really well. Everything else has been a big meh sandwich. Now I kind of backed away from the market a little bit. I came back in and mostly bought what was the meh sandwich simply because one, I don't think we're going to see leaking across the equity market, meaning everything's going to get, a big, massive sell off. I do think there is some potential for some internal rotation here as long as the inflation numbers remain relatively tame and we avoid any global problems. We've had a bit of a wobble in the economy, but I think we're probably going to move away from that. And that is simply because the employment numbers remain very, very strong. And any sort of recession is, it's predicated by seeing unemployment go up. There's a structural labor shortage in this country, and until that's addressed, much of a recession, you can have an earnings recession and you can have wobbles, but seeing, a big widespread recession is pretty tough to do. So with that, we survived over the last 2 weeks some of the biggest treasury auctions in the history of this country. 2 weeks ago, we moved half a yard. For those of you or we moved 500 yards. For those of you who don't know, that's 500 billion, $500 billion in debt sold. And that was one of the biggest auction weeks, I think, ever. And interest rates actually went down. So that indicates there's plenty of confidence in the current situation, despite what we may hear politicians talk about and everything else. Things are actually really pretty good, and that probably bodes well for the equity market. Now, going back to Brooks's question about do we have a chance for volatility in the grain markets over the last 30 days? The answer to that is absolutely yes. And there's a simple indicator that I look at. From July 4th through July 16th, I will be off the desk. I am on vacation. I will be wandering around Northwest Europe. So if anything silly happens, most likely it will happen in that time frame. And we also have a
Right
WASDE
there.
on July
We'll,
12th.
we'll, we'll go get our calls bought right now.
Yeah, there's your window. I'll be back on the 17th. I'll be doing a webinar for Bloomberg, I think on the 18th or 19th. Things will all be calm after that, but that is your best potential. And you think I'm being silly, but anytime that I have gone on a vacation, something stupid, something breaks somewhere. So that seems like a pretty good window. We'll have that 4th of July trade. Maybe the idea is the corn may be looking a little bit under. We'll see some ideas that maybe that WASDE is not going to be quite so big, and maybe we're looking at some yield cuts. And you put that together and combine that with a big fund short position, oversold market, you get a pretty good slingshot and a pretty good bounce. So that is something that where, ideas about selling corn at $6, we need to put those to rest. If you can sell corn, these futures at $5, maybe 505, 510, you can buy them back at 450. Do that twice. That may be your hedge for the year. That may be the best we get. And yeah, it's nice to think about all these things that can happen, but at the end of the day, we have to drive the road we're on and ski the slope we're on, and that's the one we're on right now.
No two farms are the same, Sterling. We talked about that. One of the biggest separators is land cost, equipment cost that's out there. And so you can see two cookie cutter farms sitting side by side, and they may have completely different balance sheets and cash flows. But it's tough for a farmer to know to go in, and especially whenever they might not have the crop they like, sell that $5, that 505. How important is it though, given the circumstances that we're in, that they make some hedge there?
I think it may be your one. What I see happening is we're going to get a bounce. That seems to be in the cards. We'll most likely get it probably between now and the middle of July. We get the bounce. That's going to move the grain off the farms because you got to make room for the new crop. That's going to create some supply things going on. Prices will bounce. That will back off the export corridor. Prices will come back. Post-harvest, we have the potential for a rally, and by post-harvest, I'm talking December, January, February. If we see La Nina come into place, which is the current forecast, and we begin to see some stress develop in South America, that's something that could turn and change things. But right now, unless we really turn that heat on, north of 5 to 525, 505, right in that general neighborhood, maybe about all we can get. And it's going to take an awful lot to get a net fund positive. In fact, if you want to get the funds where the action indicators were giving a sell signal, how many bushels do you think they need to buy, Brooks?
Oh, I saw the chart yesterday and you put me on the spot, but needless to say, a lot.
2
Probably
billion
gonna happen.
bushels.
Yeah.
2
Yeah.
billion bushels to get from
And
their
keep
net
in
short to a
mind,
decent long.
they've made some strides to get to 2 billion, to even. So we're not at the bottom like we were 60, 70 days ago. Tremendous amount of buying required by those specs to get
Yeah,
us
here,
where we need
let's
to
go
be.
ahead and let's pull up a chart here and take a look and see just exactly what we've got going on here. So here we're going to go ahead and we're going to switch this over.
While you switch, I'll talk about those indicators for a second. You can find those on the daily market email. So far, the most we've had is 2 of 4 that have triggered. The stochastics indicator has been positive. We had a brief moment where RSIs climbed above 60 and really just right at 60. That was almost a month ago. The 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 chance of all four turning green is small, largely because of the indicator that shows the speculative position. And Sterling, you've got it right there for everybody to see.
Yeah, and that's why when I mentioned, if you can sell it at 505, cover it back at 450, you can do that twice. That's $1 a bushel. That's pretty good. Because as Brooks pointed out, when we did get those signals, they were good signals. Decent sell signals, 20, 30, 40 cents in corn, 50, 80, up to $1 in beans. Those are pretty good signals. This is the current fund position right now. They're net short 186,000 contracts. To get up to where we would actually see some selling pressure, you need to get long, basically right around this 200,000 number. So a swing of 400,000 futures contracts. That is 2 billion bushels.
We're
So
going to have to see something of the likes. If we're looking at weather alone, we're going to have to see something 2003, 2008, 2012ish. If
right.
weather alone is going to drive these specs where they need to
And the
be.
problem with going back to 2003, 2008, or 2012, we had already had the weather in place. And
Right.
that weather did not feature 9 inches of rain in Nebraska. Okay. That was not part of the program going on. So we can damage and we can set things back a little bit, but we're not, that idea of 2012, it could turn into 2012 right now. We are not going to devastate yields like we did before. Okay. That is just where the ground moisture is better than it certainly was coming into 2012. So, can we get the fund position? If we could get it back up here to short, say short 80,000, if we could get them to cover 100K, that would be enough to get you to probably $5. Because when these guys start buying the positions back, okay, that's going to drive prices up. What will happen in the market is that grain will come off the farm, get sold to the commercial elevator. The commercial elevator will be selling futures contracts against this fund buying. So not only do we have a long way to go in actual positions, we're going to have, they're going to be finding a wall in here. And I think they're pretty keenly aware of that.
Yeah. Sterling, you mentioned that opportunity in December and January, and I think that's very real. We talked about that last year about how, historically we've never really considered that last half November through the first half of February being, having that volatility like we've got in June and July. And I think that's a fundamental change there. If we don't get what we need by August 10th, probably our next big opportunity, we've got to set our sights on that last half November through first half February.
Yeah. And again, watching the weather in South American progress. Right now, the Brazilian bean crop is pegged for next year, some insanely high number, 169 million metric tons. Okay, that number alone is enough to scare buyers off. That number could come in considerably. If we see La Nina like weather and they have production issues, suddenly that 169 gas to this year's 154-ish number, maybe we can pull that all the way back to 148, 149. We take 5 million tons of beans out of the market. China will have to come and buy those 5 million tons of beans, and most likely they'll be buying from us. So that will change the paradigm. And going back to the action, go ahead.
If I'm sitting here and we're kind of going back and forth between corn and beans, and I know you've got some other things you want to talk about as far as commodities. If I have to make a new crop offer today, this is me personally, and I want to turn my back on it and be okay. I want to go on vacation to Europe for 2 weeks and have my offer in. Personally, I like 501 on December futures. I like 1234 on November futures on beans. That's a long way, I know, but your thoughts on those two numbers?
Okay.
I got a text on specific offers. Those are mine. 501
All right.
1234.
Okay, these are not accounting for any basis. These are just raw.
Yep.
They're just futures. This is a chart of December corn. Now, the closest signal we got was back here in May, where the stochastics gave a signal combined with the RSI, along with an outside day with a lower close. We had a failure here. That was 487. If you had sold the close there at 487, you had a trade that potentially would have taken you all the way down to about 470, 17 cents a bushel. We had, another bounce with a high of 483. Where I would put offers in, I would put in, let's assume you have 5 contracts to sell. We'll just use that as a working assumption. I'd sell one at 480. I would sell one at 492. I'd put the balance at 502, because if we get up there, we're going to be making new highs and we will have a bit of a technical breakout. Normally, we don't like to sell technical breakouts, but we like to sell them on the upside when the fundamentals are, in fact, fairly heavy. And at that point, most likely we'll get a sell signal. If we go back above $5 and come back through, this thing could end up, we'll be back at 470 in a hurry with, one good rain. So that is about the best we can do. And I would not be too inclined to panic at this 460 level. The funds have a little bit of room to sell, but with the new crop coming in, and new crop now going to be front month futures, they may not be as aggressive just yet with some weather risk. So the downside is probably limited here, but the upside is going to be a struggle. Soybeans, again, the chart has the same sort of up and down pattern where we've fallen in the tank. Soybeans, $12, 12.20, and if we get a favorable acreage report or something like that, sit on them a little bit simply because we have that South American problem. But this market is also deeply oversold, and something here can launch it, and be wary of where it will sputter out. Make sure to look at the Tech Tuesdays. I put in Fibonacci numbers for corn and soybeans. If anyone has any questions about that, call me. I'll be happy to explain that. But that gives you some reasonable levels where we can expect the market to go. It also gives you levels where we know funds are going to be in here selling.
Really like that illustration, those Fibonacci charts you put in, I believe on Friday. Sterling, is that when they were in?
No, they're in on
Sterling.
Tuesdays.
Tuesday. I thought there was one added in later last week, but I guess it was Tuesday. I keep thinking that yesterday was with yesterday being a holiday, Tuesday was my Friday. So yeah, Tuesdays report they're in there. Those are great places to stage those offers. And the one thing I like even better than new crop staging of offers, when I talk about that, it's what Sterling talked about, selling into a rally in smaller percentages. I really, really like that for this old crop situation too. And let's face it, most of the farmers, and I know we've got a couple of farmers on the call today, we like to hold, and when a certain level gets there, unleash. We've got a time limit for most people. Most people are wanting to get this old crop sold in the next 70 days. Regardless of what happens, they're either going to need cash. They don't want to get into that new crop situation on pricing. A great way to end your marketing year, especially when there's levels you don't particularly care for, is sell a little bit all the time. And it may not even be a bad idea, Sterling, just to say, okay, I draw my line in the sand. It's between today and August 5th. I'm not so sure that you don't sell weekly increments between now and then, just to capture any type of rally, because on old crop, your timing is just not going to be perfect.
No,
And we know you got to get rid of it.
Yeah. And the guys on the other side who need to buy it also know you need to get rid of it. So again, that's something certainly with cash sales or incremental option purchases. If your bin's empty, that's certainly something that you can do that will get you to a better price. And we're not going to be perfect about this, because as I have been warning people, these rallies in here, they're like, when you see Treasury futures, when you see interest rates go up, they're very slippery. They don't stick around very long. And you need to be ready and just, well, if this is my worst sale, I should be happy with it. And if you start to see them reverse, we give the stuff up in a big hurry.
Yeah. To add to, I guess, the skepticism, maybe pessimism, and back up what you talked about. This isn't a 2012 situation. We're a lot later in the crop year than we were in 12 when we started seeing those big problems. Another indication is from a claims perspective, from AgriSompo claims perspective. We're far below where we were at last year. And I think that surprises a lot of people. But at one point in time, I haven't looked for probably 2 weeks, we were maybe 36% of the number of claims we were last year. And basically what that tells us, not quite as much replant. Now, I know that the replant claims are going to come in hard over the last 7 days, the next 7 days. But we're going to have a lot of claims thrown at us to catch up to where we were at last year. Just something interesting to make note of.
And that's again something with news consumption. You hear about the one guy who got flooded out. That makes the news, and you see that. The 8 guys around him who didn't get flooded out don't make the news. So that's sort of kind of how information comes in. But again, we do have issues, but and we just had a question. Did 2012 have
on there? And Aaron made a good point on there. Not a lot of replant in 2012.
No, 2012 actually went in a hurry, easily, and things were looking real good until about the 15th of May. And then the rain just stopped.
At the end of May, we knew we had problems, and that's pretty early in the crop year to see that.
Yeah.
So a lot of failed plantings in 2012. So we started to get those a little earlier than we normally do, but prevent plant and our replant not so much. Good point, Aaron.
Yeah,
the 2012 here, and unfortunately, I'm going to have to hop off in about 5 to 10 minutes. But I did get a text on Farm Bill, and so I hate to take us there, but let me take you there, and I'll be selfish with the meeting because of my time period. I'll actually see Aaron here in just a little bit if I can get headed in that right direction. Farm Bill, a little bit of news coming out of Washington. The House, you guys know, has the House Ag Committees passed their version. Some things coming out of Senate now. There's still hope that maybe September is that month to get the Farm Bill passed. If you're counting on that, pretty much we've got to count on it based on the fact that Senator Stabenow will retire at the end of this year. I think that she'll probably want to try to get that Farm Bill passed. What do we have to look forward to? Here's the things I feel, and things can change at the stroke of a pen, as an agent, as a farmer, that are going to change and impact the way that we do some business. Number one, I feel very, very strongly we're going to see things like CPLC stacks. I won't get into the details, but we know reference prices are going to go up. There could be some enhancements of ARC. I feel pretty confident SCO is going to be enhanced. There's some variations between the House and some suggestions coming out of the Senate, but that's something that we're going to have to learn about maybe as early as September, October. I feel like SCO is going to be bolstered. There seems to be every farm group supports that. Most of the AIPs support that. I think SEPA is behind that. So it's a good chance. The one that you guys may not want to get caught up in, that you're going to get caught up in, is I feel pretty confident there's going to be an updating of base acres at the FSA office. And we don't know the details yet on how that's going to play out. But I think that, as always, a lot of times the farmer's first call is the agent for help with that. So be ready. We're going to be on top of that, and we're going to do some training. There is a lesser percentage chance, but there is some talk of premium discounts being increased for multi-peril. I throw that out there. So essentially, higher coverage levels could potentially get higher premium discounts. For the most part, that sounds great on the outside. Who wouldn't support that? You guys know, especially if you're an adjuster or you're an agent, what that might mean with the number of claims that go through. That could mean, significantly more claims. I don't want to guess what that might be, but could it double the claim load? It's possible. So there's always some consequences with these decisions. Keep your ear out for those. Of course, we've got the Acre group started, and we're going to do what we can to keep our members up to date with that, as well as talk about this in some meetings. But those are the things that seem likely, and those are the one thing that is an outside shot is that premium discount being extended for higher coverage levels and greater amounts. That's something that we probably all like that idea, but we also need to know the work that comes with it on the backside of that. Sterling, I hope I answered that question well enough. I think I did. I am going to have to sign off to get over to Mount Vernon, Indiana. So I'm going to leave it with you. I appreciate everybody tuning in. Hopefully they got some good stuff. Put those offers in, and we'll wait for that July 4th through July, what'd you say, 15 rally?
July, your window of opportunity will be July 4th through the 16th.
All right, 4th through 16th. You guys heard it there. Sterling, take it from here. Thank you very much.
Oh, thank you, Brooks. Travel safely. And we're going to wrap up here. We're just going to talk about a few other items here. First of all, let's get the bad news out of the way. This is a chart of crude oil for August. As you can see, we put in a pretty good low right around the 72-ish area. We have bounced and put in what looks like beginning of a new structural bull market in crude oil. That is bad news, obviously, at the gas pump, or an annoyance. It's good news if you own stock in Chevron or if you're a commodity index fund investor. If we do see crude move up, there is always that possibility, and with firm metal prices, which we've also seen, of seeing an increase in retirement funds, things like that, big operations, putting money into commodity index funds. That is something that can support the grain market. So we give it back on one hand, we take it in on another. If you're looking at locking in fuel prices, particularly for the fall, most likely, I think we'll see one pullback before we go make new highs. Seeing this market get to $90 a barrel should not come as a big surprise. So if we get a dip in here, you need to lock in some diesel for harvest. Don't be too shy about it, because diesel is one of those things where we could see prices go up noticeably, particularly if we get a hurricane that comes in to the Gulf is one problem, but if we see one hit into the Northeast, that could be a problem for diesel supplies as well. And talk about interest rates here real quick. Interest rates have calmed down noticeably. We've moved into the summertime period. I don't expect to see a lot of volatility unless we see a sudden change in the inflation numbers. Inflation remains a little bit sticky, but it has definitely come in noticeably, at least at a rate of change. Again, we're not going to see prices go back to 2019. That can of soup that's $2.49 on the shelf now, that was $1.89 in 2019. That's not going to happen. That ship has sailed. But basically, we would like to see is not see that can of soup go from $2.49 to $2.69. That is kind of where we're at with inflation. Interest rates most likely have limited upside, and we may see a rate cut, but I think we've reached a period of reasonable stability as long as we don't see any outside influences driving the markets. Looking at the stock market, we have seen some odd divergences going on between the Dow and the S&P. This is a chart of the Dow, and as you can see, we made a record high. We came back rather sharply, and now we've kind of made a new bottoming process, and we're trying to shake out of that. The S&P looks completely different as the S&P continues to meander higher. Yes, it's overbought, but keep in mind, remember, the stock market can stay overbought for months, even years at a time, and we are seemingly chugging higher, and you risk even a pullback to the 20-day moving average now keeps prices fairly elevated. Looking at the star of the show, again, technology leading the way higher, and that market is again had a very impressive rally, and that has been most of what has driven this. So diversified portfolios have not maybe performed as well as we would normally expect. As far as the dollar, we did see an interest rate cut come out of the Eurozone. That did weigh on the euro, and that happened right in here over these last few days. And that did create a bit of a sell-off, but notice the dollar continues to move higher. And when we make this chart bigger and we go back further in time, there's been a lot of news coverage about how the dollar is, making all these amazing highs. Well, we're not as strong as we have been, but we've managed to hold a pretty good gain against most all currencies, and that is essentially a function of the hike in interest rates and the confidence that people want to continue to use greenbacks as the currency of choice. Looking at gold here, we'll take a look at gold and silver here because everybody likes to look at gold and silver. Gold is actually finally doing a little bit better today. We've had some pullbacks. Unless we can take out these old highs up here above 2,400 and get something to drive it higher, gold is basically anti-dollar, anti-paper. The dollar remains firm. Any upside will be limited. Looking at silver, silver is basically gold with a bad temper. And as you can see, we're up noticeably. Looks like we're trying to maybe make a bit of a bottom here. We've got some fairly good buy signals. Again, trading silver can be dangerous to your wealth, but it does look like we've maybe set for a little bit of a pop here. And that is basically everything that I had to cover. Make sure to listen to the podcasts and read the daily emails, particularly today's. Today I will be doing Wednesday's report today. Tomorrow will be exports and the commitment of traders report. So today will be the long report that covers everything. Ashley, did we have any questions? And that would appear that we didn't. So I'd like to thank everyone for their time this morning and joining us. Our next report will be on Friday, the 28th. That'll start at 10:45 Central Time, and that will be the acreage report. So don't miss that, as that should prove to be a little bit of a market mover. Thank you.